mean, the things you used to be able to ask.
Right.
They fixed a lot of those.
How's it going, guys? Welcome to the Proving Ground Review. We're going to get started here in just about 3 minutes. As you guys get logged in, let me know if you guys can see my screen and hear me talking. I missed it.
Going to do tech support instead of being a call supervisor. Call resolution.
Mic's on. It's forever recorded. That's all right. I took part of that just as much as you did. Yep. Jennifer Alvarez, ladies and gentlemen. Hey, listen, they know it's me, so you're going down with me. As you guys get logged in, let me know if you can see my screen and hear me talking. Thank you, Donald. Appreciate it. Just another minute, and then Jen Alvarez will kick us off, and we'll get started. Yeah. Okay.
All right, everyone. Welcome. There's so many of you here. Only the important ones, right? Fill out these front rows, please. And I'm going to be sending around our sign-in sheet, so make sure you sign that. And then I'm also going to be handing around our Independence Day celebration sheet. So there's a little invite on there if you want to grab it. We're having it on July the 3rd, so the day before the 4th. And we're going to be having a huge event outside. We're going to have like bouncy toys, a whole bunch of food, prizes, giveaways. So come, it's going to be super fun. I just want to get a head count to make sure we get enough food for everyone. So
we're going to have some fireworks, right?
Yeah, it's going to be super fun. So let us know. We're super excited for it. It was super fun last year. We're just trying to get bigger than it was last year too. So, and again, remember to keep your phones off. And if you need to use the restrooms, they're just right back behind all the plastic. Construction is never ending here. And ask tons of questions. So,
thanks, Jen. Appreciate it. If you can hit that middle button on the lights, that'd be great too. Thank you. All right, guys, welcome. So we're going to do today is something we've done in the past. And of course, if you guys have any questions related to this particular topic, or anything else with regard to trading, feel free to ask as we go along here. But I wanted to go over some pressure exercises that help people identify pressure a little better. So when I was first shown this, it was really eye-opening to me. It was Kevin Jones Jr. So when I first signed up, we were in a different office, and Kevin Jones was doing the light training. And so at this point I had already, been, trading and gone through coaching, things like that. And he was still doing these light trainings, and I would never go to the advanced training. I'd always just sit in on his light training. And he always asked, like, what are you doing here? You're an advanced member. You should be, with everyone else in the advanced class. But at the time, there was maybe like 2 or 3 people that would show up to that. Sometimes it's just him and I. I'm getting like one-on-one coaching from Jones Jr., so no, I'm good. I'm not going to go anywhere. But anyway, one of the things that he did was just kind of showed some of the nuances of pressure. So I've essentially just assigned names to certain things in terms of pressure, just so that we could, as a culture, refer to them in specific ways, so that we all know what we're talking about, without having to go through this like long explanation as to what we mean by something. But just, if it's called something, it's referred to something, then everybody's on the same page. And so I realized that, just looking around, there might be some new faces, so you guys might not be familiar with how we refer to some of these. So I'll just kind of go over them really quickly. But first, I want to emphasize one thing, and that is that the pressure indicator is our fastest indicator. How many of you guys know that? Good. If you didn't know that, we'll show you why a little bit today. We're definitely not going to be able to master pressure indicator today with you guys, but we'll at least point you in the right direction. So it's always looked on as lagging because the expectation or how we're looking at it, right? So what we expect is for it to point in the direction that we're trading. For some of us that are new, for some of us, we don't even need it to point in our direction. We actually want to see it before it starts pointing in our direction. We want to catch it before that point. And there's a number of ways to do that. But what's important to understand about pressure is that pressure is it more lends to other indicators, right? So in and of itself, it would be inadequate to just trade on by itself. But if we could see that the tides are changing, that's where we're going to see it, is in pressure. And then we use other indicators like major, minor, TNT to validate that and then place a trade in that direction. So some of us can catch trades as the shadow comes down and then we go up, or the wick goes up and then we're shorting, right? So as the movement is moving against the position that we're looking to take, because we see that nuance happening within pressure. So that tells us before the move happens. Otherwise, if it's pointed in our direction, it's just telling us what's already happening, which is fine, because if there's enough pressure, then we can see that there's going to be a continuation of that happening going on, right? But wouldn't it be nice to know before it happens, right? Because these are predictive indicators, so let's use them predictively. Okay, so let's start with short-term bias. Short-term bias is not referring to how long, but just that the immediate bias is going to be either long or short, buy or sell. And so for the sake of our conversation tonight, we're going to refer to where green is, okay? The green pressure line. We're not even going to say red unless we're saying where green is, whether it's on top of red or below red, okay? And the reason why we're going to do it is because it's semantics, right? So if I say green on top, when you think top, do you think up or down? Up. If I say green on bottom, when you think bottom, do you think up or down? Down. So if I always refer to where green is, then you're going to follow along as to which direction I'm looking for in terms of bias, right?
So short-term bias is just whether it's up or down.
Short-term bias is whether green is on top of red or on bottom of red. It doesn't matter which direction is pointed. That's short-term bias. In other words, if green and red are pointed up and green is on bottom of red, then we have short-term bias, short or sell, even though the pressure lines are pointed up, okay? Long-term bias is the direction that the lines are pointed. It doesn't matter which one's on top or bottom. If they're pointed up, long-term bias is up. If they're pointed down, long-term bias is down. Okay? Yes.
Both of them.
Yeah, both of them pointed. Yeah, if they're not pointed in the same direction, then long-term bias would be sideways. So that's also a thing. Yes. Now, negative convergence. Negative convergence means so we'll take this one step at a time. I'll give you an example. Green on top, that's short-term bias, up, right? Green on top, and both lines pointed up. That's short-term and long-term bias up, correct? All right. Now, converging, in other words, green starting to lean closer into red, that's negative convergence. that means that pressure is dissipating in the direction that we're currently going. So if we're pointed up and green is on top and it starts to lean back into red, that's what we refer to as negative convergence. So convergence is not always good depending on how you're using it, right? If you're looking to short and it's doing that, then awesome, because now you're starting to get negative convergence, which will lend to your short. Okay, so positive convergence. You have long-term bias, let's say up, so both lines are pointed up, and green is on bottom of red, right? And it starts to lean into the red. That's positive convergence, because on top of them pointing up, now green is going to give you short-term bias, which pops on top of the red, and now you have short and long-term bias in your favor. Okay, so negative, positive convergence, short-term bias, long-term bias. Okay, what am I forgetting? I think that about sums it up. All right, say again.
That's about all.
That's about it, right? All right. So we're going to be looking for all of those things tonight, but we're going to look at the most obvious and then how those compare to some of the more nuanced. Now, again, keep in mind that just because we're getting negative convergence doesn't mean that the move is going to happen immediately, right? Or we have short and long-term bias doesn't always mean that the move is going to continue in that direction, because at some point it's going to end and go the opposite direction, right? But what we want to see is that there is an actual effect that happens when these things occur. And so if you can use that to justify, say, not going long or going short or whatever it may be in a particular trade situation, using, say, major and minor as your side cart, then it's really going to improve your entries, your exits, or staying out of a trade that could potentially get you in trouble. Okay, so right now, which way are these lines pointed? Down. So what does that give us? What kind of bias?
Long-term bias.
Long-term bias. Which one is on top or bottom? Which one's on bottom? Green. What is that in terms of bias? Short-term bias. So we have both short and long-term bias to the sell side, correct? Somebody have their hand up? Oh, no, okay.
Negative convergence.
And negative convergence would be as they start moving closer together, right? So as we click forward, we can see that we're getting negative convergence, right? Because green's already on bottom, so if it pops on top, then it's dissipating. So let's not look at pressure like some would call it a trend indicator. Pressure indicates trend, but it's not a trend indicator. There's a difference. Yes, sir.
So when you say one's leaning into the other, how do you say, is the green leaning into the red, or is the red leaning into the green on that one?
It's irrelevant. They're both converging. So they're moving closer to each other, right? Generally, when they move close to each other, after having both short and long-term bias in that direction, leaning into each other is dissipating pressure. So let me give you an example here. Let's say that this is a pressure gauge, right? And this is short pressure, and this is long pressure, or sell and buy, right? Now, if this needle is pointed here up, is that short or long pressure? Neither. It's sideways, right? But it's pointed up. So what you're telling me is it doesn't matter which direction this pressure gauge points. All that matters is I know how to read it. Correct? All right. So does it matter all the time if pressure is pointed up or down? Not all the time, if I know how to read it. And nor is it telling me that the market's going to go up or down when it's pointed in those directions. So we call these types of setups illogical, because they're not logically, whatever direction it points is the direction it's going to trade. That's a logical trade setup. Illogical means it doesn't matter which direction it's pointed as long as you know how to read it. Okay. So that would indicate sideways. Well, what if this arrow was pointed here? Short, right? That would be like, an example, that would be both short and long-term bias down, right? Green on bottom, both of them pointed down. Both green and red lines pointed down. Now, here's where the magic happens. What if it's pointed here? It's still short pressure, correct?
Yeah.
But this is where it's dissipating. It's no longer strong in the direction that we've been headed. But it's still, the pressure is still down. Green is still on bottom, but now it's negatively converging. So that needle is moving off of the high sell pressure. but the indication is still short, technically, right? But now it's dissipating. Well, what if you're getting something in the major and minor that are correlating with that, right? After a while, you can look at the major. We're not going to learn about major and minor and some of those facets, but we did when we talked about the fake outs, right? Hiccup head fake. They're pointed down, right? And we go long. Well, what if we saw negative convergence after they pointed down? Perfect. That's just another form of validation that we're going to go long, right? And then we see green pop on top, and then we see this whole other string instead of waiting for green to pop on top and both lines point up, right? Because by the time that happens, the move's already happened. Well, don't you want to be a part of that move? You can say yes.
Yes.
All right.
I was nodding my head.
All right. I saw it. I was there. But if I was blind, Okay. So same thing here. If this is pointed here in a pressure gauge, what is that saying? Long, correct? Doesn't matter that the arrow is pointed down. It's indicating long pressure, strong, long pressure, right? So again, look at the pressure indicator like a pressure indicator. If you look at it like a trend indicator, you always just ignore it because it seems lagging. You want for it to point in the direction that you're trading, which means if you wait for it to point in the direction you're trading, it only does that once the market's already moved in that direction. So the only time you use it is never, because by that point you've already made your decision, or you're using other things and you're just kind of like, well, pressure is doing kind of, this thing or what have you. But if you look at it more dynamically, then it becomes much more useful and valid in every trade that you take, right? Doesn't matter if you never use it. If you're doing really well without it, then stick to what you're doing. Don't mess up your formula. If you've back tested, you've got something that's working really well for you, continue with it. Aside from that, practice with, if you feel like you want to, step up your game and learn another indication or whatever the case may be, then awesome, practice with this, right? But don't, if something's already working for you, don't try to mess that up and add some other step. That's not going to help. It's just going to convolute things. The simpler, the better. But if you're not there, you find that you are confused about things, or sometimes you see major minor pointed up and then they short and you're not sure why. Pressure could absolutely help in those particular situations, right? Okay, so we have negative convergence now. Now we've got more negative convergence. What happened? The market still went down, right? So right here, green just barely popped on top of red. Okay. Move this line. So I wanted to mark that. We ended up getting more wick and shadow. Why? Because we got that negative convergence. Sometimes it's more prevalent, especially when major minor are giving us that follow-up indication. Then a lot of times we can capitalize on those and just, steal a quick up, right? That's 9.9 pips. It doesn't look like much, but it's 9.9 pips, right? And then we start softening. So where did we see this softening? Where did we get our first indication that this softening was going to happen? Because look, we had reds, and then right there it softened.
Converging and then across.
Yeah, it was converging, and you're absolutely right. It was converging, then it crossed, right? So right here, we started to see negative convergence. Look, big block, smaller block, green candle. That needle came off of the short, was still short, but came off, right? And then maybe sideways, and that's why we got a sideways candle. Doesn't mean that now all of a sudden we're just going to start buying like it's nobody's business. But you can see how if we were going to perhaps enter a short down here and try to take the continuation, we might find ourselves in a little bit of trouble, 20 pips upside down, right? Or we could have just tried to scalp the long and then wait for a better positioning to continue to short by way of major or minor. So you can see, again, in and of itself, pressure indicator is not going to be enough to give you everything you need, but it's definitely going to give you some quick insight as to whether or not we're going to see some continuation, or we should possibly wait for that retracement and then get in somewhere during the retracement to continue short, or start going the opposite direction altogether, right? Will you say that line again? Pressure is not an indicator of trend. So pressure indicates trend. It's not a trend indicator. So the analogy we always use, and for those of you guys, Christian's smiling because he's like, here it comes. Ira always says we're talking about pressure. It's like saying that your car is a headlight, or your car is a flashlight because it has headlights, right? It's like saying that. How much more value is there in a vehicle than just to illuminate. Much more value, right? Okay, so pressure, trend indicates pressure like your car can illuminate the road, right? But its purpose is transportation, a mode of transportation to get you point A to point B, not just to shed light on something, right? It can do that, so it can identify trend, but it's not its primary job. Its primary job is to kind of show you when that pressure in the direction you're trading is dissipating. So it gives you an edge to trade the opposite direction or what have you. Okay, so let's keep on going here. All right, so now green's on top, and now they're both pointed up. So now we start to get some more of that. There's some separation. We start to get more of that up, right? But notice what's already happened, right? Green's on top, they're both pointed up, and now the market's already moved up. It's already moved from here to here, 40-something odd pips. So it'd be nicer to get in somewhere down here versus, okay, now they're pointed up, and they're not even very well pointed up, but now they're pointed up, and now we're ready to go. A lot of times what you'll realize in trading, which is the most frustrating thing for new people, is that when everything is pointing in your direction, you should probably consider going the opposite direction.
Too late.
It's too late, right? So by the time everybody started screaming about Bitcoin, it was too late. All right. So just remember that. And think about this. In this industry and in this business and the position that I'm in, I get things that run across my desk almost on a daily basis. Here's the new hotness, right? Here's the next best thing. Here's the bee's knees, especially here in Utah. It's awesome, right? I would have to literally put $1 in everything and then hope that one of the things that I heard about that ran across my desk was one of those things that's going to blow up in order to get in on something like Bitcoin, right? Nobody believed in Bitcoin until it did something. The few people that did, they got ultra wealthy on. Well, guess what? People hit jackpots in Vegas. They win Powerballs. All that stuff really does happen, right? But statistically, it's not going to happen to you, so quit holding your breath. Okay? You got to work for it. It's all right, because if you know how, then you've got the formula, right? The analogy we always use is it easy to dig a hole? Yeah. Is it simple to dig a hole? Yeah, but it's not easy, right? But if you know that there's gold somewhere beneath where you're digging, you just keep on digging. So that's the concept of backtesting. If I tell you there's gold here, here's how you get it. X marks the spot. Just start digging, right? You're not going to get one shovel full of dirt and pull out a mound of gold. You have to dig in a little bit. You have to go back to January 2015, test forward, have your scientific mathematic data, and then you're ready to go. Now you got gold. Start printing money. Start printing money. That's how they refer to the market. Those that have made it in the market, it's like printing money. It's like your own ATM that just keeps on refilling, right? And the money's liquid, especially with CoinEx. I mean, you can transfer in and out within 15 minutes. So if I made a trade right now, I can just go into, and transfer into Coinbase, transfer into my bank account. It's there instantly, right? 15 minutes. All right. So let's keep going here. So there's that negative convergence we were talking about, right?
Why again is that negative? Because the green is leaning into the red?
Yeah, because green's on top. So right now we got short and long-term bias up, and then they start converging, right? So it's kind of undoing some things that we hear thrown around quite a bit, like convergence is good. And when the lines are really close together, that move is going to really move in your favor. That's not always true, right? Especially when we're talking about negative convergence. The opposite is true when we're talking about negative convergence, right? Because that pressure is dissipating. Again, it doesn't mean the pressure is gone, but it means it's dissipating. And sometimes the pressure is absolutely gone. So where else would we look to determine whether or not we want to continue to buy or do nothing or sell? Major minor is a great place, right? TNTs.
So right now, long-term bias is up, but it's also negative convergence.
Yep, long and short-term bias is up because we got green on top and all four lines of points, or both lines are pointed up. But now they're coming together, so that pressure is dissipating. So that pressure gauge is moving off of the L position, the long position, It's still long, but it's moving off of it now. That pressure is dissipating.
So you're looking at those lines, if green were on bottom and they're coming together, that'd be positive.
That would be positive conversions. That'd be a good thing. And that usually means continuation in that direction, right? Okay. Surprise, surprise. Right? Did we get up move? Yeah, we got up movement, 4.7. But we knew the pressure was going to dissipate because we saw it, right? Well, we didn't know indefinitely because all we're looking at is pressure, but it's a good indication. So if anything else, it tells us, look at something else to validate, right? But now we're not looking at everything else and then pressure. We're looking at pressure first and then everything else. Yes, sir.
So would you realistically put in the cell as soon as they come together?
Nope. Not unless I had another form of validation.
Okay. So like if the majors were telling you that.
Yeah. If major minor were pointed both up and having been overbought already, like the follow up to the hiccup or head fake,
Yep.
and we see that convergence, yeah, I'm running my fingers together like this with a grin in my hand, like, yep, it's time to print some money. Go to my 5-minute position and short that sucker, because those are the trades that I'm in and out of seconds. I can't. If I'm not fast enough, I don't have an opportunity to set my take profit. So if it's a 10 pip day, if I wake up and like I'm going to take 10 pips today, take a couple minutes, place a trade, and I get into a trade like that, I know, well, the only reason I'm going to get 10 pips today is because the market's going to move 20 before I get to put in my take profit, right? And so it moves and I just X and close it and take my profit and I clack my heels. Well, use my hands and then put my feet together. And then, we're good, right? Let's move on with the rest of our day. So it's exciting for a moment and then, it's good. Or it ends up taking 20 minutes and I get frustrated because I'm not out of my trade yet. Okay. So now we have, all right, where is our long-term bias? Long side. Where's our short-term bias? Short side. But we still have long-term bias up, so we're not really sideways yet. But we could be looking to go sideways. So here's another important thing to understand. Sideways of a red is what color? Green. To go sideways, you have to have red, green, or at least wick and shadow, right? So that's, again, when we're looking at situations like that and we're like, well, it's up, but green's on bottom. Green being on bottom doesn't necessarily mean that we're going to sell, especially if it's sideways. If it's sideways and we have other forms of validation telling us, you know what, we're still good for some long here or whatever, then you can expect that you're going to see some long movement. Doesn't mean you're going to see a green candle, but you're going to see some wick, meaning the market's going to move up most of the time in a situation like this. Again, obviously, all we're looking at is pressure, but just something to consider. As we're going along here, I just want you guys to consider those things. Now, the other thing is that if we are considering any type of retrace, we're looking at the body, so it's 3.5 pips. It's not like a whopping trade, right? But we get sideways. Actually, we get some pretty decent down, right? 14.6, and then it goes 15.3 up. But we get sideways of that, right? So we still got sideways. If major minor in that situation was still saying long, then we would just go long, right? Because we know we're going to get sideways of that, right? So if we're going to go long, then cool. If you're going to use positioning, try to position somewhere on this shadow, the best place to look for that is going to be on a shorter term chart. My favorite is a 5-minute. If you guys attend Phil, how many of you guys know Phil Farmer? How many of you guys know he's going to do a session tonight after this session? Awesome session. Like in a year, he's lost 5 trades. The great part about what he does is not only does he take trades with you guys, but he teaches you how he's taking those trades. So tonight he's actually going to give a handout. I know this because he came into my office and asked me about them on his 5-minute positioning. He's like, well, how did these look? What do you think? And they look awesome. It's going to be really valuable information. I would definitely recommend you guys talking to Phil about joining that session. He's probably going to kill me. No, Phil's an awesome dude. And he'll be glad to have you guys. He loves this stuff. He's passionate about it. He wants to teach people how to trade.
So I opened up a demo account to run his system.
Good. So you're up.
Yeah. So it was $2,500 account. I've done 45 trades or so in the month so far, and I'm at 88%.
That's awesome. That sucks, man. That's horrible. No, that's awesome.
I'm over there just saying
That's-
thank you, Phil.
Yeah, Phil,
It's
you know,
fantastic.
it is absolutely, and it's palatable. It's something that's duplicatable.
Yeah.
And that's what I really like about that session, is that Phil breaks it down. So it's something that, yes, you can take those trades with them, but you're also going to learn something. You're going to be able to take away from that and be able to apply it. That's what's important. Look, if you guys, you know, get a free trade and it works out for you a lot, awesome. That's great. You know, pad your account. But the only thing I encourage in those situations is make sure that you've identified some type of stop that's going to be relative to your risk appetite and that you're using the correct lot size. Just saying, I'm just going to put it in a 0.01 doesn't mean squat. Just because that's the lowest lot size you can use doesn't mean that you should be even putting in that trade to begin with, right? Because if it loses you money, it doesn't matter if it's a penny or $1,000, you lost. You're not making money. How many of you here are here to stay broke forever? Nobody? No takers? Right? All right. You guys wanted to day trade, not because when you were in elementary and somebody asked you what you wanted to do for a living, you said, I want to be a day trader, right? A professional day trader in the Forex market. Oh, you're doing this for money. Well, right now, you know, obviously later you'll figure, and maybe you have figured out what you want that money for, right? Unless you just want to stare at it, which I'm sure some people want to do. Right? What was that duck called? That guy with all the coins? Right? DuckTales. Uncle Scrooge?
Oh, yeah.
Yeah.
Scrooge.
He's gonna swim in that, and you probably can't do that, right? Even as a kid, I'm like, you know what? It'd probably hurt to jump into all those coins. It looks fun, but I don't think that's real. Anyways, nobody wants to just stare at it. You want to spend it. You want to spend it on things that you want to or need, you know, to improve your quality of life.
How do you find out about Phil?
Phil's not doing AIT. Brett does AIT usually. Phil, I don't think ever does AIT, Nolan, but good question. Bill, I don't know that he's doing webinar yet, but I'll talk to him about it tonight, and I'll lend him my webinar so he can cast it. But I think he'll be doing it in this room, perhaps. It used to be in the conference room, but I think he might be doing it in one of these main training rooms for tonight's session. Scrooge McDuck. Yeah, thanks, David.
How often are you doing sessions?
Wednesday nights.
Every Wednesday night.
Yep. 8:30? At 8:30. Okay. So let's continue on here. So again, we had sideways, so the market moved sideways. Now it's moved sideways. Now the pressure indicator is telling us sideways because it's showing us what's happening, not what's going to happen, right? So keep that in mind. To use it aggressively, you want to be able to identify how it looks when it's going to do something. It's okay if you're using it. It's okay if you're using it a different way and it's working. I don't want to kill that. And it's okay if you're not using it at all and whatever you're doing is working. If it's working, stick with it. I don't care whose it is or what it is. If it's working, continue, right? If it's not, or you feel like you need some assistance in your up game, I would look to pressure immediately, mainly because the condensation is the slowest indicator and because that we have the notion to just ignore it and not pay attention to it. And it's not, it's the fastest. When we realize that, we start putting more precedence on it, identifying how it works in its nuance, and then increasing our up game. Okay. Mark, I'm not sure. I'm not sure if he's doing a webinar. If he does, it'll be live. I'll talk him into it. I'm sure he'll be open to that, especially because I know a lot of you guys out of town.
He does do a webinar.
He does on Wednesday nights at 8:30?
Yes, he does.
All right. Someone shoot him a text, ask him for a link, and if you guys can give that to me, that'd be great. Mark, I'll get you that in just a second. For the rest of you guys that are online and not local, I'll get that link for you guys.
I think I've got it here.
Okay. All right. So now we have both short and long-term bias in our favor, right? And notice now we have it because it's happening now. It's not because it's going to happen. We already got our big red candle, right? So right here, depending on what major minor look like, this could tell us, okay, we can continue in this direction because we don't have any negative convergence, right? We have parallel lines, and that's always good. But it's always good to look at your major, minor, or something else to justify that particular direction. Because sometimes these throw you for a loop. All of a sudden, the next candle will get negative convergence and some crazy stuff. Not really negative convergence, but we didn't get a lot of down there. Retraced about 15. Okay, so this is one of those examples where we're looking at pressure, and it wasn't really telling us anything to justify what happened next, right? So sometimes if you're looking at pressure and you say, okay, it's telling me down and I see other indications that are telling me down, I'm going to short, right? Or in some instances saying, well, it's telling me down, but I got these other things that are telling me long. If none of that makes sense, you do nothing, right? For some of us, we'll look at other time frames or we'll look at other indicators. But if you're not at that level and you don't recognize what's going on, it's okay to do nothing.
Better than a loss.
Better than a loss, yeah. Think about it. If you're trading at a 2-to-1, each of your losing trades are worth 2 winning trades, right? If you're trading at 3-to-1, then each of your losing trades are worth 3 winning trades. So if you did nothing that would have otherwise lost you a trade, you're up, right? You're ahead of the game because otherwise you would have ate. Right?
Does pressure work on other time frames?
Absolutely, pressure works on other time frames. It works a little differently, especially like on the day, and the more you get watered down, because a lot of those things are going to be contingent on announcements, right? And announcements brings in. So the reason why announcements are so difficult and why we don't trade them is because there's, especially with big announcements like today, for example, everything was overbought and it still continued to buy, right? That's because there was new volume placed into the market, right? And if you notice throughout that, if we replayed the 60-minute chart, the miners were like trying to short the whole time, right? They were done. They were gassed out. They had taken their profit or whatever, or they're trying to go the opposite direction to catch the 3 swing, and majors use that to just continue to push up. But a lot of times what you'll see in those situations is that miners will try to haul off and buy, and then majors just take them to the bank and go the opposite direction. And it doesn't matter. Don't believe the rhetoric. It doesn't matter what the announcement says. It doesn't matter if the announcement says it's supposed to be good for the U.S. dollar. That does not mean that the U.S. dollar is going to strengthen. It doesn't matter. All the banks need for you to do is just buy into that rhetoric and, like all the lemmings, run off the cliff altogether so that they can do the opposite, right? That's why we didn't get into Bitcoin, because by the time a lot of people heard about it, it was over. We taught about Bitcoin to tell people, stay away for a while. Let me teach you about cryptocurrencies. Don't do it. It's a really simple class. And eventually perhaps it'll get stable, but I'll give you a tip. A lot of times when you're looking at investment, it's not always the most obvious. On the contrary, it's rarely the most obvious. Bitcoin's probably, and it may or may not be, but one thing I'm absolutely certain of is blockchain is where the future is.
Yep.
And it's proven that already. It's not my opinion. Blockchain is where the future is.
What's blockchain?
Blockchain is like the accounting method for cryptos.
It's a technology that cryptocurrencies are based on.
Yeah. So it just accounts. It's like a glorified receipt taker, right?
Yeah.
But it's stable and it's not attached to a centralized bank, which means you don't have all the political and geopolitical influence that you would otherwise. Now, obviously, the different countries are going to try to control it by way of backing a certain crypto, like U.S. backs Ether more than any other country. Asia backs Bitcoin more than any other country. So they'll try to use that to continue to perpetuate their currency wars. But for the most part, blockchain kind of locks them out of the equation. And I'm sure they'll eventually figure out a way around it. But for now, that's kind of the quo, right? All right. So now we have negative convergence and short-term bias up. Long-term bias up, short-term bias down, negative convergence. Screens on bottoms, scratch all that, take your brain out, wash that out. Let me fix that for a second. We have short-term bias to the sell side, long-term bias to the long side, and positive convergence, because green is leaning into red as they're both pointed up, right? Now, again, this doesn't necessarily mean that we're going to continue going by. That's why we would need our other indication. But when you start putting these pieces of the puzzle together, the whole picture becomes much clearer, right? And then it's less of a guess. It's more of a statistically based, assertion, and you're gonna find that your win percentage will increase, your drawdown is going to decrease, so that you've got a better ratio and a higher win rate, which is a recipe for success, right? High win rate, low ratio, risk to reward ratio. So if you've got a 90% win rate, but you're risking a 5-to-1, that means you're taking a 10 pip take profit and a 50 pip stop loss. Well, you'll win, let's take 10 trades, you'll win 90 pips, 9 out of 10 for 10 pips each. And one loser will knock out 50 of those 90 winning pips, which will leave you a net of 40, right? That's a 5-to-1 ratio. Well, what if you had a 2-to-1 ratio with a 90%? Well, so 9 out of 10 of those trades win for that 10 pips, right? So that's 90, and 2 lose for, say, 20 pips, because that's a 2-to-1 ratio. So that's 40 loss, which means you have 60 pips in net profit. That's how risk to reward works, right? All right. So let's continue on with this here. So we saw it coming, and of course it happened. Green popped on top of red. As a result, we still ended up getting continuation movement into the long direction. Now green just popped on top of red. A lot of times when we see confirmation on major minor, we can justify continuing in that direction, especially by way of a pattern-based setup, which we call dirty pressure. Thank you. So green just pops on top of red. All 4 lines of major minor pointed up. We continue with a buy for, 5, 10, 15, 20, whatever pips you've determined based on your back testing. So here's where it becomes really valuable to back test by way of this byproduct education. If you're back testing dirty pressure, you'll realize after even 20 or 30 examples of finding a dirty pressure setup, that negative convergence. You'll start clicking and you'll say, well, it's not likely that green's going to pop on top of red. And then all of a sudden, you'll say, oh, I've seen this a million times. These lines get close. Green's likely to going to pop on top or bottom of red now. And you'll start to slow down. You're already starting to realize those nuances of pressure, right? So if I teach you something like this first, and then you go and back test dirty pressure, naturally those things that I taught you today are going to work from the back of your brain to the forefront of your brain. So all I'm doing is planting a few seeds here and there. And the best way to exercise that knowledge is to practice it with a goal or intention in mind, in this case, dirty pressure. And we do the same thing with a lot of nuances within our indicators. We assign a pattern-based trade that you can go and backtest, and some of these nuances that you're not going to gravitate to immediately because it takes some experience, we have you backtest those, and you'll eventually, that information will move from the back of your brain to the forefront of your brain, and you'll have that, byproduct education, right? Okay, so let's have an exercise. Now you guys can see that convergence matters. So I want you guys to tell me when you think that green is going to pop on bottom of red. I'm just going to click forward here. So we can see probably not the next candle. It happens, but probably not the next candle, right? Not the next one. Right there, right? Now that looks, and sometimes it doesn't, but right there is the most likely. If it's going to happen somewhere, that's where it's going to happen. There you go.
I don't know if this will help, but that's his link.
Okay. Do you have my phone number?
I don't.
Okay. Here, put your phone number in there. Oh, he's just sent it to me.
Okay.
Thank you. So now we know when it's going to do a certain thing. You guys, about 5 or 6 of you shouted out that you thought it was going to pop on bottom, and it did that thing. Okay? You know what the indicator is going to look like next. It hasn't even done it yet, right? I want to paint a picture for you. You know what it's going to do next. You know what it's going to look like next. What if you knew what the reaction of it doing that thing is going to be? Right? People salivate over saying, if only I knew what the market was going to do next. If only I knew that Bitcoin was going to do that. If only. Well, what if all this gave you was 5 pips a day, but you did it a high likelihood of success with minimal drawdown? That'll make you rich. Rich. Whatever rich is to you, it'll make that for you. Whatever that is to you. And it's different for different people.
Make you wealthy.
Yep. Well, rich, wealthy is different, right?
Wealthy is
We just had this conversation, right? Rich, money, dollars, right? Wealthy by
time.
time, right? What's more valuable, time or money? Time. We don't know how much of it we have. We can't buy more of it. We can't bargain for more of it. Money, you could probably go and panhandle and get some of that, right? Not probably. I'm fairly certain, right? Enough. Yeah, that's right. So if enough people did, there's got to be something to it, right?
That's right.
Yeah. What if green pops on top with long-term bias to the sell side? We're getting that dissipation to the long-term bias in the sell side, right? So it starts to dissipate. That pressure starts to dissipate, like it did here, right? We have long-term and short-term bias up. Green's on top. All 4 lines pointed up. And then we saw the convergence, and then we saw green pop on bottom, right? All right, let's put the candlesticks back. Because this is the same question, but in reverse. All right, so we had green movement. So it started to kind of wane right about there, but we didn't see it there by what we're explaining tonight, even though it started waning already. And then really started waning there. And about the same there, right? These candles are, this is 15.3, this is 10.4, right? Yeah, not bad for those little tiny candles, right? So right there, we said stop because the next candle green might pop bottom of red. What? Right? If you know what's gonna happen, could you have capitalized on that?
Oh yeah.
Right? Now, is it always going to happen that way? No, but that's all right. You account for it. That's where backtesting comes in. Then you know how much to account for that happening. So we just went blindly, right? I just erased the candlestick and said, you guys tell me when you think it's going to happen. You guys called it. But look at how many, and this was just a really cool example. We kind of got lucky with that example, but count this out. 1, 2, 3, 4, 5, 6, 7 green candles, right? 7 hours, and we knew where the red was coming, right? So it's not enough for a weatherman to tell you it's raining outside. You can tell that by the waterfall on your head, right? It's great if a weatherman tells you it's going to rain, right? But it's best if a weatherman tells you it's going to rain and for how long it's going to rain, right? So that's what the best indicator does. It tells you what's going to happen for how long it's going to happen. And that's what pressure does for you when you combine it with major minor TNTs, is it tells you what's going to happen for how long it may very well happen.
So what's the shortest time frame you use pressure
on? The shortest time frame I use pressure on, I would say, is probably going to be the 60-minute. That's me, though. There are people that use it on the 5-minute, all the way up, all the way down to, if you're trading futures, 1 minute. 1 minute on the futures market, I could slay it. Yeah. But on Forex market, 60 is just stable. I use a 5-minute, much more fickle. So I'm just looking for, most of the time, I'm just looking for these different setups for it to be maxed out in the opposite direction I'm looking to trade, or whatever it's going to give me, and then I'll take the opposite direction, which rarely resides in pressure. It's mostly in major minor, sometimes TNT. So I would say for me, it's a 60-minute. But there are other guys that I know Dr. Zed trades a lot with the 5-minute chart. So I'm sure he's got some insight into pressure on a shorter time frame, maybe. Yep, 5, 15, things like that.
Why is futures trading not taught here anymore?
It's for one, because to go into futures and be consistent, you've got to have a good understanding of the indicators. What happens is that people kind of jump left to right? It's like, well, let's run over here because somebody's talking about something new. Okay, let's run over here and let's try to combine all this information into this supreme ultimate trade. And there's all this crazy information that I've got in my head. And when I was just out of light training, I was doing really awesome. But now I'm really super smart, so I'm doing worse. you know, and then we want to stick you into a more regulated, higher volume, more risk market where you can't compound as aggressively. You need more capital in order to get started. So let me paint you a picture. In futures, you can't trade quarter lots or quarter contracts. You can trade one contract, two contracts, three contracts, so on and so forth. You can't trade 1.5, 1/10, 1.25 contracts like you can in the Forex market. Forex market, you can trade 1/10 of a lot or 1.01 or, whatever you want. So with futures, you can't do that. Each contract, you have to have $500 in a brokerage account, which doesn't seem like much. Except for that your overnights are 5 times that amount. So you need $2,500 per contract. And if you can't hold that, then you get taken out of that trade forcibly at 3 o'clock Mountain Standard Time. The other thing is that your compounding effect is vastly diminished because you're expected to have $25,000. This is a recommendation, $25,000 in an account to leverage one contract. So if I want to trade 2 contracts so I can start compounding, I need $50,000. So until I get my account to double, I can't even start adding another contract, which would make me more money for the same amount of movement, right? Where in the Forex market, I can make a trade today and then tomorrow increase my lot size by 1/10 of a lot if I wanted to, thus increasing my compounding ability, right? So for the same amount of trades for the same amount of time, a futures account is not going to outpace a Forex account. Now, the money comes quick and fast, but it also is lost quick and fast because you don't have as much leverage. You can't hedge. You can price average, but you also, again, if you're going to use 2 contracts, you better have 50 grand, right? So there's a lot of variables in there that would stop you from being successful, which is intentional. That's why they don't want you to Forex trade. There's just nothing they can do about it. They, meaning banks, and banks juice the government and politicians, so they, meaning politicians. This is not like conspiracy 101. This is fact, right? If the banks can't beat you very easily, they don't want you to trade in those markets. Therefore, most of the information that you get is going to tell you, don't trade Forex. That's dangerous, right? When it's the contrary. It's the absolute contrary. And I can show you on paper 5 ways from Sunday why it is the contrary. But if the banks want to beat you much quicker and more effectively, then they're going to push you to futures, options, equities, binaries, primary, secondaries, all that kind of stuff, because you don't have as much protection for yourself. Dodd-Frank made certain of that. So it's not that we don't teach it. We have a lot of traders that do it, but they are proficient in Forex. So most of them are already wealthy in Forex. Now they're like, I'm bored. Try something new, right? So you can take some discretionary money, use what they've learned in Forex, and apply those same setups to the futures market and see how they adapt, right? What we use a 60-minute for, they're going to use a 1 and 5 minute for, right? But you'll notice half flat tops, hiccup head fake, gray daggers, 4-ways, whiplashes, all that stuff. It all works on the futures market. There's just some adaptation you need, whether you're using a tick chart or a minute chart, and or a 5 minute or whatever it may be. Which futures market you're trading on, is the ES minis or the CAC or the SPY Russell? What it is, it's all going to be different, just like it is with Forex. Are you trading, which currency pair are you trading, right? You might be able to get a 5 pip on the GBP JPY or on the Euro USD for a dirty pressure, and a 20 pip on the GBP JPY, but you're going to have to wait maybe 5 to 10 pips of positioning to get that 20, but it'll happen most of the time. You'll get that positioning first, and you'll be able to knock down 20 pips, where on the Euro, you're going to get 5, right? Because there's different movement, volume, volatility, liquidity, a number of things. Times that you trade matters. All these different things matter. The simpler you keep your approach, the better, though. Master one thing and on one currency pair and stick to it. Get rich on that, and then go and explore and try out other things. If you can't right now, in your seat right now, say that you've mastered just one thing, and you're still struggling as a trader, there's your problem. Just go back to one thing, the simplest thing the easiest, simplest thing Go back to that one thing, master it. Watch how it gets you rich. It's what I did. I tell you guys all the time, and still, I look at your charts and I'm like, it gives me a headache just looking at that. How do you have all that crap on there? I'm asking, anybody? Someone? No one? Everyone's like, I'm not going to admit to having all that crap on mine.
I have a lot of crap on mine.
Do you know what, Dr. Zed? You better make $1 million. Otherwise I'll be the first to tell you. Or maybe the second. Your wife will be the first to tell you.
Yeah.
All right. All right, let's do it again. Tell me when you guys think these lines are going to overlap, change positions, right?
Next one.
Think so? All right, let's check it.
Oh.
Okay. I want you guys to go back and play with this because you'll know. Anyway, let's continue.
Next candle.
Okay, let's see. Nice. All right, green on top, right? Let's mix in one other thing here. We got a couple minutes. Which one of these does what I want it to? Yeah, that one's pretty safe. Okay. That's almost a Hydra. All right. Yeah, almost a flat, almost a whole bunch of stuff. All right. So back here, we can see that convergence. We see strong movement up. We are almost overbought. We're not overbought yet. Red and black are lagging. Green and red are overbought. We go flat on the thick orange. We kind of get that doji, right? It kind of ended the same place it started. Green did pop on top, so that's going to be relevant, right? Again, if you look at this and it makes no sense, it's okay to do nothing, right? But if you feel like, okay, you know what, I've still got some room to go long, or maybe I'm not going to use that up. I'm going to wait. I'm going to use that whatever long there is to position to go short, right? Then you'll want to consider those things. But you can see that pressure in and of itself, it wouldn't be enough to justify what to do in that particular situation. If we're definitely biased to the long side because of what pressure is showing us, right?
Yeah.
Okay. So moved up about 11.2. So if you took that, you'd be happy, right? If as long as you went for something 10 or less. And then for those of you that would have otherwise positioned and shorted, you might have, ended up with just about the same. Okay. So I want you guys to practice that. Next week, I expect that you'll have questions. So if you don't have questions, then I know you didn't practice.
So what's the easiest way to turn off your other indicators?
I wouldn't. I would just go back and not pay attention to them. Just look at pressure. It's the easiest thing to do versus risk messing up your charts. Because guess what? If you mess up your charts, you're going to be the only one that doesn't know that they're messed up until you look at someone else's chart. You're like, hey, mine don't look like that. And by that time, you have screwed up a few trades. Or you're like, I'm doing really well with these messed up trades. No, I'm just kidding. All right, guys, I'm going to hand it over to Kevin Jones. I think he's got an announcement. And then if you guys have any questions after the session, I'll hang out for a minute. This is not working. So
Yeah, I was gonna say, is it even streaming to your group?
It is, but the mic's not working for whatever reason.
Okay.
Yeah.
So I have a quick question for you guys. And feel free to answer out loud. Why do you think we do these Wednesday night advanced classes? And the AIT and the MIT and our trading competitions and dates with Dale, all those things. Why do we do those? You love us?
Meet other traders.
Because we love you. Okay. Yeah. Meet other traders. Okay. What else?
Build a sense of community.
Okay. Yeah. Definitely. Yeah. To teach, right? Yeah. So the reason I bring that up is I was really just thinking about it. Why do we do that? And it really goes back to our core commitment, and that is to help you guys understand what it is why you're here and how to get you where you want to go. Okay. And that's something that I always want you guys to keep in mind as you trade. Is I really want you to consider what it is, like not up here, like right in your heart. What are you doing here to learn to trade? Why did you do that? Okay. And really, I'd just like to acknowledge you and say thank you for the effort that you put in here, because your contribution to our business is a big deal to us. And I just want to say thank you for that. I want to say thank you for the time that you put in to attend those webinars, those functions, those events. and the things that I get that you feel like maybe it's there to help you, but really you are contributing so much to what we do here and what we're able to accomplish for teaching other people to be able to trade and get where they want to go and receive what they want to out of trading, right? So that's really all I have to say tonight. Thank you guys for being here. I hope that you'll take that commitment from us and also just recommit yourselves to attending as much of that stuff as possible, because the more we can do that, the more we can get that community going, the more we can get the possibility of you meeting other traders and really seeing that success that I know that you all want in trading with us. And we want that for you as well. So let's give a round of applause to Hiram, and thank you for being here.
Thanks, Kevin. All right, get a link for the webinar. Yes, I do have a link. I'm going to get this plugged in right now. Let me bring up something. You guys might have to. Actually, let me do this. Let's go to the chat.
All right, well.
Paste. My pleasure, David. Thanks for joining us. I'm going to paste this link in this webinar, so those of you guys that want to hang out for a moment. I just sent it to myself. So that way you guys don't have to dictate it as it's written here. You guys could just copy it. Paste. Voila. There it is, guys. That's for Phil's. So go ahead and mark that down, copy paste it, 8:30 Mountain Standard Time. Join him. Let him know that I sent you. I'm sure he won't kick you off regardless, but just let him know I sent you. My pleasure, Mark. Thanks for joining us today, guys. Look forward to seeing you guys on Tuesday next week for Mastermind, Wednesday night for the Proving Ground Review. Have a good night. Thanks. Say again?